Hi, everyone. This is Jason Burack of Wall Street from Main Street and independent financial journalist and managing editor of the News Doctor's Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 24. Eric, our last episode was right before the Brexit vote. I think it was less than 12 hours before the Brexit vote. I know I remember staying up late and actually watching the live feed of Brexit on Facebook, actually, as it went down.
Yeah, and we definitely were surprised, as with most people. The vote came down, and surprised even the people who were trying to, argue for the Remain camp.
Exactly, that's a great point. So Boris Johnson and Nigel Farage, they didn't even think they would win. So the people who are like, "Oh, you were wrong about the Brexit outcome," well, the main people who are championing for it didn't even think they had a chance.
we can speculate as well, too, because I'm pretty safe in assuming that there probably was a certain degree of vote tampering going on and padding of the Remain camp. And who knows, maybe powers that be just didn't pad the vote enough. Maybe there wasn't enough vote fraud, and the degree to which people are just fed up was underestimated. I've seen a lot of speculation amongst pollsters being interviewed in the aftermath, where they basically are being presented with questions of how the hell did you get this so wrong? And it isn't the first time that the British pollster community has really messed up. And there's probably something to be said about people not wanting to admit fully that they are in favor of Brexit because of fear of being labeled racist or anti-immigrant or what have you. Not that uncommon with the way in which a lot of Americans are clandestinely rooting for Trump to win.
That's a great point. The other thing is the poll said that a lot of millennials, these are, younger generation, younger adults, who have actually, been brainwashed through government schools and the mainstream media longer than all other generations, they were actually in favor of staying in the European Union in England. And they actually, according to the votes from the polls, they didn't turn out to vote. So they were polled saying that they were in favor of staying in the European Union, but then when it came time to vote, they actually didn't show up. I also heard that as well.
That's true.
But I mean,
That's true.
Yeah, but the other thing, though, that I've seen is just how poorly, Nigel Farage was treated after the vote. People, the mainstream media in England and the United States was just, having him on relentlessly. Oh, he looks like, I heard Samantha Bee, who used to be on The Daily Show. Oh, he's a ugly, disgusting person who looks like a frog. Just huge character ad hominem attacks and things like that. And people come in, oh, he didn't have a plan for what happens when the independence did happen. I mean, he thought it was highly improbable. It's just really amazing, though. I think, he stepped down gracefully. He had a nice, graceful step-down speech. But the real reasons he came out, Eric, were he was just getting thousands of death threats. So, he didn't want his family and friends close to him, subject to violence or so many other things. So that's why I think one of the reasons why he stepped down. Hello?
Yeah, I'm here.
Okay, well, I want to move now to the gold and silver updates. Other than my last comments on Brexit, I think my comments are, I'm glad that people in England will get a shot at independence, but, we'll see if they squander it or not. I don't have a lot of faith in the politicians and central bankers and bureaucrats in England to actually, do the right thing and keep their independence going, reduce taxes, improve their economy, things like that. I just don't have faith in the powers that be based on their training because, in many different countries, the training is basically the same. Well, gold and silver acted very good after the Brexit vote, Eric. We almost had in a single day $100 spike. Are we keeping that trend going with gold and silver? The bull market is still looking good?
Well, yeah, I mean, the bull market is alive and well and was alive and well regardless of whatever the heck would have happened with Brexit's vote. After the Brexit vote, we've seen a lot of volatility. We've seen efforts to try to contain what's going on. When silver got over 1850, that was a long-term threshold that has been acting like a pivot point in that a lot of technical traders have been looking at it and expecting to see a momentum move once we had leaped over 1850, and that indeed happened. And this week it's kind of interesting in the sense that in the last, we're recording this on Tuesday, and the market is now closed in New York, July 12th. And silver was basically strong this week and getting ready to do a momentum run and a test to 22, give or take, which is another one of those levels that the technical traders are paying a lot of attention to. And even if members of our audience poo-poo technical analysis, and rightly so, because it's in the context of highly manipulated markets, it really needs to be taken with a grain of salt and put into a proper context. The point is that there's a heck of a lot of monies that are following technical analysis as their North Star and sextant to navigate these markets. And what happened this week is very telling, because gold in the last 48 hours have been under pressure because silver was going bonkers to the upside, running towards that 22. And, we 2 days ago, and then through the Sunday trading into the evening, we had gotten as high as $20.65, give or take, and now today we're sliced under $20. And that effort to compress silver is something that has only been successful within basically halfway through today's COMEX session, where it finally was treated to a waterfall decline after gold had been under pressure for 48 hours. The cartel was trying to cap gold in an effort to contain this huge move with silver, because if silver were to continue to run up higher, it would end up being like this kind of feedback loop, getting a lot of people within the precious metals community even more excited about the ongoing bull move. So this is kind of like a managed retreat, where earlier we saw the managed retreat and the Brexit vote, the jump to $100, those kind of things are basically the price manipulators backing off, because the pressure to control those kind of moves would require the expenditure of just way too much capital and efforts to manipulate. But even so, on that $100 day back on that Friday, there were over 60,000 new contracts created on the COMEX in the gold pit to match up against the huge burst of buying interest that came in from organically interested buyers wanting to get exposure to gold. And, they're chasing paper gold, and these paper traders on the COMEX have been allies towards the realization of higher prices in the gold market. I mean, for better or for worse, definitely for worse, the market is largely set in price discovery terms by the COMEX, by the LBMA, by these paper traders. And here we are. I mean, the paper traders have been important factors in the reason why the Western world and the 95% of monies under management have been migrating incrementally in a very, very, very small basis towards gold. And we've had over what now amounts to almost 400 metric tons of gold added to ETFs worldwide. So, I mention all of this, and I go on a tangent about the paper traders in part because a lot of people within the stacker community basically just poo-poo what goes on in the paper pits. COMEX and LBMA are farcical in price discovery, to be sure, but nonetheless, they're still creating prices that are governing the whole market that we find ourselves watching, and we're still in that paradigm. But we this week are seeing stories about how Japanese investors are beginning to second guess that whole idea about buying lots of safes and stuffing 100 or 10,000 yen notes into them. And it was 6 months ago we were talking about how there was a run on safes in Japan. The whole Abenomics quantitative easing to the stratosphere is ratcheting up even further. Bernanke was over in Japan over the weekend to talk about helicopter plans of money drops. So the gold market, the precious metals bull market overall is alive and well. And even though we see constant wall of worry, nail biting by the peanut gallery, and analysts that talk about how a deflationary crash is going to kill this market as well as the equity market. I mean, the reality is that very few people have exposure to precious metals, and the tidal wave is about to sweep over the whole industry. It's a mega bull market, and with negative interest rates all over the world, with Brexit, there are now, latest count, having generated 39 efforts around Europe for secession. Various political parties basically being motivated now that the imagination has been stoked for greater individual sovereignty versus amalgamation within the European Union construct. So there's so much involved in Europe that is now in flux. And you began to speak a bit about the banking situation in Europe, and that's a perfect segue. The Brexit situation is adding to, it's like gasoline on a fire. The instability of the political scene is amplifying the confusion amongst these various institutions, the ECB, the relationships between various countries, and how there's always been a friction between the quote unquote more sound money leaning Germanic faction within the ECB versus all of the folk that want to basically do QE to infinity and expand bond buying and so forth. And that latter camp is winning, and this Brexit vote, in a roundabout way, will probably amplify that, because it's making it more clear that there's no solution to the European banking crisis other than outright bailouts. I mean, Doc and I broke the story about the bail-in model being introduced in the West back a couple years ago. And even at the time when we broke the story, it was really clear that the bail-in model could never be used effectively because the problems are just too big. The bail-in model can work to put out a small fire in a small institution, or in the context of Cyprus, if you want to talk about real-world examples, they bailed in about $10 billion or $15 billion, and they basically hosed Cypriot bank holders and Russians in particular. The Russians were using the Cypriot banking system as a way of money laundering. So that's our bail-in model. The reality is that it can't work. And now we've got the chief economist for Deutsche Bank talking about how there's going to be a need to do outright rescuing of banks and a full-on bailout. And he's talking $150 billion equivalent of European bailouts as being sufficient to save the system. And that'll definitely stem the tide and put some fingers in the dike. But I don't even know if $150 billion is enough once it goes through the leverage process of fractional reserve banking and so forth to be able to fix the problem.
That's probably not even enough, Eric, for just Deutsche Bank. I mean, even if Deutsche Bank got all that money just for themselves, there wouldn't be any money for the rest of the banks that have problems. I did a shorter video last week or the week before about the European banking crisis, just going through the different zero hedge stories. And, it's not just Deutsche Bank, although Deutsche Bank's probably the largest problem. There's other German banks that have enormous amounts of problems. There's Italian banks that have enormous amounts of problems. We're getting word through different sources that there's bank runs in Italian banks, that people on the ground in Italy are having trouble getting the cash they want out of the ATM. There's Portuguese banks, Spanish banks. Banco Santander is one of the ones. It even failed the low bar stress test of the Federal Reserve.
Yep.
And hedge funds are attacking Banco Santander. They're using it as a proxy for the subprime auto loan bubble that's in the process of bursting. We even got a government warning about this recently about the subprime auto loan bursting. I saw a story on it on CNN reporting from a government agency warning about it. So Banco Santander has a large amount of loans given out to emerging market countries like Brazil and Latin and South America, consumer loans where people, had commodity or infrastructure jobs down there that were their emerging middle class, higher paying. And, in the last couple of years, those jobs have gone bust with the low base metals and low energy prices. And, now the consumers there who had those jobs can't pay their mortgages. They can't pay their car loan. They can't pay back their credit cards. And Banco Santander was one of I remember covering Banco Santander when I was just, regular investment analyst for stocks at Investing Daily as an emerging market play. because they had so much exposure to Latin America, and they were talking about how good a growth story it was, and now it's in reverse.
Yeah, exactly. I mean, the whole 2000 through 2007 period where the whole emerging market reflation boom was going on, and China was, producing 1/2 of the world's cement that had been produced in the equivalent of the last 20 years. I mean, that kind of gigantic build-out sent an enormous amount of investment into Brazil, and Banco Santander was a major player in that gateway, and now we're seeing the reverse of it. In fact, we talked about Banco Santander in one of our earlier shows as being kind of just a hidden bomb. I mean, a lot of attention has been on Deutsche Bank, and people see it, but Banco Santander is a bomb waiting to go.
Well, yeah, they're a proxy for the emerging markets collapsing because, they were a Spanish bank and they opened some branches here in the United States, but then they really started a boom growing out, opening branches in Central America and Latin America and South America. So they, have a lot of branches down there. That was their growth spot. And, they were probably just growing like crazy. But, in that video I did about the European banking crisis, I think it's imminent now, Eric. And it's, as bad as Deutsche Bank is, I think there's a lot of different reasons for it. Throughout the articles I showed in that video, there's a lot of different strategy that the elites are openly talking about, the central bankers and the politicians and the bureaucrats and things like that. So they're talking about, nationalizing banks, creating good banks with good assets in quotes, and bad banks with bad assets in quotes. That might have to happen for Deutsche Bank in the near future. I think Deutsche Bank shares, the shares may eventually go to zero. Maybe they'll slow down how quickly Deutsche Bank shares go to zero, but they'll probably, right now they've gone from a lot higher market cap down to only like 15 billion, I think, in market cap. So they've lost like 90% of their market cap very, very quickly. But yeah, the different strategies that they're talking about are nationalizations, bail-ins, bailouts. They're talking about going after pension fund money. So there's a lot of discussions here, Eric. But, you talked about how big the problem is with the derivatives market, the Brexit and the collapse of the British pound after Brexit. We don't know because they won't disclose this, but there could have been a lot of over-the-counter derivatives trades on the British pound that were leveraged from these banks or hedge funds, and they might have triggered, some margin calls or things like that on a very, very large scale. So I think ultimately, because the ECB is more constrained than a Federal Reserve, it's going to be time for Janet Yellen to maybe implement even larger amounts of currency swaps again to start giving, the European Central Bank interest-free loans to start bailing out the European banks even more than they have since 2008.
Yeah, we'll either have currency swaps supporting outright monetization and further purchases of equities from, official sector, as what has been doing in Japan and Swiss National Bank openly, or we'll just see, QE4 in the United States and already are seeing signs that Japan is going to ramp up. So one way or another, it all boils down to just hyper liquidity coming our direction. And Deutsche Bank probably never go to zero. They'll probably be nationalized before then. But there's really no way around this. And the powers that be since 2009 have attempted to run an extend and pretend operation, quite literally the phrase that was coined to describe what they're doing, and it's failing. And now that we are seeing, most recently, Holland joined the negative interest rate crowd with their 10-year bonds going negative last week. The system is creaking, and it's just a matter of time. And the most likely scenario is a slow bleed with punctuated bursts to the downside, which is exactly what we've been experiencing since 2014, the end of the 2014 period, because the stock market peaked out in 2015. And then at some point later, we'll see further deterioration of psychology to the point where we can see a crash. And I think that at some point we're going to see a crash as a cap to this entire belated downturn that's been dragged along and allowed to have existed in part because of just the monetary support in the marketplace now. I mean, we've had mutual fund redemptions running at records, and the only reason why the stock market is up as it is now is because of official sector buying and the cheap credit that's around that's enabling speculators to push the equity markets higher. And then when you add on top of that a certain degree of safe haven flows and so forth, that's why our market is where it is now. It certainly isn't because of the health of the economy. I mean, come on. It's gotten to the stage where so much of our financial world is an illusion that I don't think I've ever seen. I mean, you and I joked when we did our very first show about how things have gotten so bad that it seems like, it's never been as much of an illusion as what we were commenting about even on our first show. And with every passing month, with every passing quarter, things just get crazier.
Exactly. It's definitely a dystopian world we have right now. Let me just read some of the current events that I've seen on Zero Hedge and elsewhere for the last couple weeks that came in after our last Welcome to Dystopia show. So we have China saying now that it will use more than $300 billion in pension fund money from Chinese savers to push up stock prices higher. So this is kind of like what Japan did for decades now, how the Japanese pension funds were forced to buy shares, go into the stock market. But, this goes back to the U.S. savers, what happened, how U.S. retirement plans decades ago, really in the 70s, I think it was the 70s, changed from defined benefit, where the company used to give you a pension, to defined contribution, where, Wall Street was going to manage your money and take a cut every year of your retirement money in 401ks and IRAs and things like that. And you were going to be forced to put your investments then into mutual funds, either bond mutual funds or stock mutual funds, and that was going to force asset prices higher then because, you didn't have as much control over your retirement money as you would have in the past.
It was mostly late 1980s when that whole process started. And, there's now a pending evolution where the federal government in the United States and other governments around the world are going to chaperone people's retirements into government bonds and call that something that's a progressive nanny state advancement to protect their wealth, because we all know how dangerous the stock market is. In reality, it's really all about corralling the 17, 18 trillion dollars worth of assets that people have in their IRAs and so forth into the service of a gigantic federal government debt and the service of that debt.
Well, Eric, 12 trillion of negative interest rate bonds globally. It seems to me that bonds are basically now certificates of confiscation. We know the real economy if you're on Main Street. We know your taxes are going up. We know your currency, the purchasing power of your savings and money is buying you less every year, basically across the board in almost everything, whether it's rent, healthcare, food, education, etc. So, I mean, it's just there's so many potentially dangerous things out there. In Japan, I'll give you another one example, current event. Ben Bernanke just visited Abe and Kuroda in Japan, and he's talking about steps for them to do even more helicopter money programs. Japan, the yen had been uncharacteristically strengthening basically for over 6 months now. The yen had gone to, I think, like almost 90 on the dollar, and on its exchange rate with the dollar. So it was getting uncharacteristically strong against the dollar when obviously the central bankers in Japan wanted to weaken the yen to boost exports. So, I mean, they were talking now after Ben Bernanke's visit there about a 10 trillion yen stimulus program. So immediately the yen started a reversal. But I think why the yen is strengthening is because of the carry trade is closing out. There's a lot of hedge fund managers and investment bankers, high net worth family office people that were, trading, doing these leveraged billions of dollar trades. They're getting out of stocks in different stock markets and bond markets and things like that. They're either going to cash or they're buying physical gold. Did you see that bond trader Jeff Gundlach? He's been praising gold. He bought it. This is a guy, Eric, that I think normally would not have bought gold in the past, and a billionaire bond trader, and now he has a good chunk of his net worth in gold. Although I think the mistake that a lot of these billionaires are making when they do buy gold, Eric, is they look for liquidity and they put their capital into GLD, which GLD in the long term is a SCAM.
Yeah. And that's pretty much across the board. Most of these folks, with the exception of people like Kyle Bass, who have formerly made the argument that the carry cost of actually getting physical stored and insured and allocated and so forth really is actually not that expensive. But the Soroses, Druckenmillers, in a completely different world, and they're not really going for anything other than price exposure hedging when it comes to their paper exposure for their so-called paper gold.
Yeah, I completely agree. I think they're just in there for the capital gains. Maybe they do own some physical metal, but they don't have to disclose that publicly. So that's why I think, George Soros, like, he does all these gold stock trades and he buys GLD and he's shorting things and things like that. He doesn't have to disclose how much physical gold he owns. So he could own, a ton of physical gold. He could be one of Egon von Greyer's best clients, in that crazy James Bond Swiss vault that's like the most secure in the world. And Egon von Greyerz couldn't talk about it due to, confidentiality agreements that George Soros could have, a large portion of his wealth in there already, and, no one would really know about it. Well, another evidence that we see, Eric, that the real economy is not doing well in the United States, despite the fact that stocks appear to somewhat, at least for now, be in a crack-up boom, where, they're going higher either on devalued currencies or increased liquidity injections with currency swaps or flight capital coming to the United States, is that Zero Hedge had a story, and we'll attach this link for you guys. I've been saying this for years, Eric. You and me have been discussing this. I was predicting driving around and looking at restaurants and also talking with people on Main Street, guys like you who listen to this program, who email me and tell me about your everyday lives and things you see around you, is that a lot of people are not eating out at the casual dining restaurants. So, Monday through Thursday, unless maybe Chipotle or something like that, because Chipotle is a little bit lower cost and they have more organic food than some of the other restaurants. But most of the other restaurants, if it's a casual dining and sit down where you have a server and things like that, a lot of people have not been eating in those restaurants Monday through Thursday. So normally, they would go into these types of restaurants a couple days a week. People are cutting back a lot, and we're seeing evidence of this. There's more than a 5% drop now in the last 3 years of restaurant guest counts. So a 5% drop for the whole country, Eric, is a pretty significant amount.
Yeah, and the retail sector is also rolled over, and the amount of goods that are being shipped around the United States and worldwide, no matter what you look at in terms of statistics, all show that it's been plummeting. We're in a global recession, and there's no way anyone can, slice and dice the data to say anything but that, but that effort is tried.
I think you may be too kind with the word recession. I think that's like, Keynesian speak there. Keynesians don't like talking about the word depression. Even 2008 wasn't it relabeled the Great Recession instead of a depression?
Right.
Yeah, they relabeled it the Great Recession instead because they don't want to talk about the D word.
Yep. We're in a closet depression, and it was papered over since 2008, and the depression's mechanism was the crash in financial assets in the shadow banking system, blowing a gigantic hole in the real economy. And then on top of that, the central banks with the partnership of federal governments put all of that crap on their own balance sheets and nationalized it.
Well, it was either that or an immediate crash. So They did that to buy themselves, even a little bit more time, and they didn't worry about the long-term consequences. They just didn't want everything to crash immediately. I've said this recently in interviews. The way the system is designed right now with the central banks and the policymakers is they've come up with this choice: either they can crash now or crash later. So they've just decided, eventually things are going to crash. The IMF is even saying this. The Bank of International Settlements has warned against this. So they just, instead of crashing immediately, they just keep on trying to, whatever new program they come up with, to delay the crash more and more and more.
It's a formal policy.
Yeah. And there's lots of different schemes for this, besides just money printing from central bankers. There's new schemes now. If you're a DC area employee, the government, if you have a full-time job with the government will give you the money for a down payment to go and buy a house instead of renting. So they're coming up with ways to keep the asset bubbles inflated and keep demand for houses and things like that where there shouldn't be demand. So yeah, I think the real economy is definitely crumbling. China, the plunge protection team now with the retirement money that I talked about. So it's so many different countries. One of the things though about in the last couple of weeks was my interview with Nolan Watson, and I think that's a really good interview if you're looking for investment opportunities with Sandstorm Gold. The stock has doubled since its lows in 2015, but I think it's still very undervalued given their growth profile, and they have solid cash flows that are diversified. But one of the things I learned in that interview, though, Eric, was how many copper miners and base metal miners are looking for cash, and people are scared to give them loans because of how bad their balance sheets are, how low base metal prices are, and how scared people are about the global economy and the probability of copper and base metal prices going higher again in the near future. So it basically sounds to me, and yes, we've had exploration cut in base metal miners and things like that, but we haven't had an enormous amount of mines shut off yet. We've had, maybe high grading and things like that. We've had a small amount of mines. I think it's less than 10% of base metal production, especially copper and iron ore and things like that. We haven't had massive cuts in production of these things quite yet. We've had drop in earnings, a drop in revenue, obviously, from lower metals prices, but I think they've been running the mines hoping that there's a recovery. We haven't just had, large-scale 20, 30% mines shut down across the board. If we do have that, especially for copper and lead mines, then that would really benefit supply for both gold and for silver long term.
Particularly silver.
Yes, particularly silver. But, I don't think the carnage is totally gone for copper and base metal miners. I think we're going to have a lot more carnage from speaking with Nolan Watson. Also, Silver Wheaton conference call, too, that confirmed very similar things. The CEO of Silver Wheaton was talking about how many base metal miners are calling him up, desperate to do deals with him for emergency capital injections to sell, silver streams or gold streams. So I think that shows desperation on that part. And, once those loans and those companies do go bankrupt and the loans go fully bad, and they haven't fully done that yet, because obviously it hasn't happened on the scale with the oil market yet either. But once that does, that's going to cause even more stress for the banks that gave out those loans, because we know that they don't have the capital set aside for subprime auto loan losses. We know the banks don't have capital set aside for those, for loan loss reserves. We know they don't have the capital set aside for oil and energy loan losses, and same thing for base metal miner losses.
You remember the stories about how Texas regional banks were even telling, or being advised by the Dallas Fed to be more permissive with loan reserves for, regional energy companies that they had made loans to, and to not worry so much about the books that they were carrying as rancid as they were. The whole extend and pretend model and thesis is up and running at a level that, like we joked about a moment ago, it's just getting more loopy as we get longer in the tooth of these malinvestments that this hyperliquidity has engendered. And the longer it goes on, the more pain it's going to produce in the long run, unfortunately. These excesses will be addressed by the marketplace, whether or not the central planners of our world would like us to think differently. The laws of economics have not been repealed.
Yep, I completely agree. And this is why, I've had David Morgan on the past, and he said a couple of years ago on an interview I had him on, he said that Keynesian economics, the longer it's implemented, always leads to stagflation or worse. So this is why I think that we're getting worse and worse stagflation on Main Street, because it seems to me, Eric, the only way that the people in power, the central bankers all over the globe, can even keep things from collapsing tomorrow, the next day, is new types of currency devaluation programs and, liquidity injections and things like that. And the people on Main Street are just getting screwed because they're not next to the money trough.
Or just outright theft. I mean, we would talk, or just outright theft. I mean, we were talking about what Japan is doing with, retirement assets. It's basically removing people's freedom to be able to manage their own retirement, and having a nanny state usurp that monetary largesse to be able to fix the problems of the government. And the same thing's happening in the United States. I mean, financial repression is just another form of that.
Yep, and Japan, the Japanese central bank and Japanese government owns a large chunk of Japanese stocks and ETFs now, too. So, I mean, the Japanese culture, though, is different than the American culture. It's a lot different. Americans are more independent, although, now there's a lot of Bernie Sanders people and Barack Obama lovers and things like that, and people who have gone through the university system who are more collectivist. But in general, though, the Japanese culture is a lot more collectivist than American culture, which tends to be, more individualist. So I think, the Japanese people have been willing for decades to surrender their savings to the government admitted, after their banking crisis in the 80s and 90s, that we have a crisis and we need your savings to fix things. And the Japanese saver was willing to hand over their savings to do that. If the U.S. government if Barack Obama, before he leaves office in the next election, was to have a press conference, tomorrow and say, oh, we need the American people's help. We're going to take, 10% or 20% of all your retirement savings right now for this crisis. I think there would be an uproar of Americans, whereas, in countries like Japan, they were more willing to surrender their savings for things like that.
If you and I were having this conversation 20 years ago, I would have agreed 100%. Now I'm not so sure that I have quite the level of faith that the uproar would happen, because the degree to which Americans are brainwashed now is it's monumental. I mean, I don't know. There's this kind of push and pull where half of the country, give or take, is completely oblivious and asleep, and then there's a very large segment within the other half that, to various shades of gray, are aware of what's going on and are making it quite difficult for the balance of the policymakers' goals of corralling our wealth. Dave Granzer likes to joke about how the ultimate goal is to sweep the last vestiges of middle-class wealth off the table and into the hands of the oligarchy, and there's some truth to that.
Yeah, I mean, that's been the goal for a while now, take away our liberties for the most part, increase the amount of surveillance and ways they track us, tax us more, and, just steal our wealth in a whole bunch of different ways, whether that's, layering on extra taxes when we go out to eat at the restaurant, or a new Obamacare tax, or all these different things. They just, blatantly lie in a lot of cases. Before we get to our Scumbag Nominees section, I just want to congratulate Peter Schiff on doing a 180 and, seeing that Bitgold and Gold Money is actually a good business. And now, for our listeners who aren't aware, Peter Schiff has now joined the Gold Money and Bitgold team with Eric Sprott and James Turk, and John Butler's on there too. John Butler's involved with Gold Money, Alistair McLeod, and Roy Sabag and Josh Crum.
Yeah, even Peter would probably freely admit, if you can't beat him, join him. In fact, to some extent, he even did that admission in his interview with Josh about a week ago.
He did. He actually said how happy he was to get all those Bitgold and Gold Money shares. I think they're not a consistently profitable business yet. Bitgold and Gold Money, for our listeners who are not familiar, they're on the Toronto Stock Exchange now, publicly traded. Eventually, they'll probably be listed on American Exchange, but not right now. But, they are growing revenue rapidly. They have over 1 million customers in barely only a year. That's really impressive to have over 1 million customers in barely only a year. And Peter Schiff is really good at marketing, so that should really help bring awareness to their business. So I think, they're going to be able to grow revenues and customer base very, very rapidly. Eventually, they will be able to make that business consistently profitable. Obviously, because it's a bullion business now, selling bullion, in general, bullion businesses don't have really high margins, but because they do so much of the business online with sales, and also, they have the storage costs more efficient at the vaults in the different countries, I think there's ways for them to cut costs and keep the cost of the business low that other bullion dealers that are normal, regular bullion dealers just wouldn't have.
Oh, yeah. And if you look at, from an accounting point of view, the sales, general, and administrative expenses of that kind of a business model, it's more along the lines of a software company. I mean, when it scales into much, much larger volumes, you will not see the commensurate increase in office and expenditures and the kind of things that a bullion operation would have in terms of, the shipping department and all that stuff.
Yeah, or a sales staff. Yeah, or a huge paid sales staff. Yep, exactly.
It's an entirely different business model. And when they're 10 times larger than what they are now and growing thereafter, the profits will be rolling in, because it'll be a pretty nice high margin. Well, not necessarily a high margin, but a contained cost business model such that as revenues grow, they will continue to be profitable.
Yeah, I get your point, Eric. There's a great book out there called Buffettology. It's not a long book. You can buy it on audiobook or regular. It's written by Warren Buffett's, I think, niece. I think she married one of his sons and then divorced him, married Buffett. She kept the last name. She wrote Buffettology. In Buffettology, you learn how Warren Buffett looks at different businesses. I would classify Gold Money or Bitgold as a low profit margin, high turnover business, meaning that they generate a lot of sales very, very quickly, right, compared to other businesses like, an aerospace company where, they sell one plane for $40 million or something like that. So, they're a low profit, high turnover business, like Chipotle is. Chipotle is a low profit margin, high turnover. Chipotle doesn't make a lot of money selling taco platters or burritos or salad bowls or things like that, but they get a lot of sales.
The other thing that Bitgold has, Gold Money has, is that they have a defendable moat when it comes to their technology. And in fact, their regulatory competence in navigating the regulatory spiderweb nest that is, what they have to deal with. I mean, they're not even able to fully operate in the United States. So all those things are, it's a defendable
exactly
competitive advantage, and that's in fact what brought Peter Schiff to the table, amongst other things.
Well, yeah, and it has Eric Sprott and so many other, and Nolan Watson, Sandstorm Gold, and even George Soros' sons, who are, probably saw the advantage of that. The economic moat you're talking about, the durable competitive advantage, is their network effect. Similar to PayPal, where if you and me, Eric, if I bought something from you and you want to pay me in gold, I would just, if you had a Bitgold account and I had a Bitgold account, I could just send you the gold from my account in Bitgold to your account in Bitgold. And I don't think I'd be charged a fee because it would be from the same network. So as long as they have a lot of customers on that network and the payments are across one to another, they can keep the fees low on that. And then if you want delivery of your gold, either in gold or silver, you can get coins or bars directly delivered to you now if you want to.
Yeah, well, I mean, the concept of the economic defendable moat is also everything. I mean, it's the whole package. They have created a critical mass at this stage where they have technology that is very difficult to replicate at the scale at which they've achieved. So, the regulatory spiderweb navigating element of it as well, too, is a defendable competitive advantage. But, Buffett has always been the type that is skeptical of technology and technology companies because it's just not something he understands very well. So don't expect Buffett to be buying this anytime soon, but it is interesting to see, interest from people like Soros's camp and all that.
Well, I just mentioned the Buffettology book because Buffettology divides every single business that you can invest in or start into 4 different categories that are very simple for you to understand. So that's why I put it from that framework. I think, but if you want to be a good investor and understand, or even start your own company as an entrepreneur, I think Buffettology is a good book to read and understand which category of business you're trying to start or invest in.
Yeah.
So there's different types of businesses you want to totally avoid. That's low profit margin and the sales don't occur quickly and things like that. So now I want to get to the Scumbag Nominees section here for our show. Unfortunately, Eric, there's so many problems right now and so many news stories. I mean, I could spend way over an hour on either against crony capitalism, reading news stories and headlines, or on Zero Hedge, reading news stories or headlines. But we'll just keep it to 4 for today's show.
I might.
Huh?
I might throw in a 5th.
Okay. Well, I have 4. My first one is the elephant in the room. Since our last show was right before Brexit, we haven't talked about was Hillary Clinton. So obviously, I want to just say that I think you're wrong. You said that she would eventually be charged, and I was adamant for basically the last 8 months that she wouldn't be, just because of how. Let's just say how connected she is to the people here in the Department of Justice and so many other people. I was, adamant that she absolutely wouldn't be charged. I didn't say
that she was going to be charged. I said that she was going to ultimately not be the nominee because of the clout that was hanging over her. And though I got that wrong, and I also said as well that Elizabeth Warren would be tapped, and there was mechanisms going on at the time to, in fact, consider tapping her. Even that flirtation of tapping her was something that as early as in the last, or as recently as the last 2 months, has been stuff that is out in the so-called rumor mill as they, launch trial balloons, engage public opinion, and try to figure out how to best position the party. But ultimately, and then we've also seen a lot of trial balloons in the same vein with respect to Joe Biden. But ultimately, there's this kind of war of control files between the intelligence operations that all of these various players run and the psychopaths that they are. They make war on each other, and we have Hillary Clinton and her entire faction basically lining up and saying, okay, you take me down, I'm going to take the whole damn government down with me. And as a result, there is basically a Democratic establishment, the Democratic Party establishment, kind of throwing up its hands, recognizing that, well, Hillary is our scumbag, and we're going to just run with her and hope that that'll carry the day. And in the meantime, they don't really seem to have much of a plan B at this stage. I mean, it's not a foregone conclusion. It's not a foregone conclusion that she's going to get through and win for sure. But even in the conventions, I wouldn't be surprised if there's a bomb that's dropped in terms of something with respect to her background, whether it's emails that are leaked by hackers or something that comes out of the Trump camp or whatever, that makes this, convention on the near-term horizon turn into an absolute circus, such that it could conceivably even just, take Hillary down in terms of her popularity with the zombies that are wanting to vote for her. But though I got the overall forecast wrong, I got the mechanics and the moving parts and the reason why the moving parts were significant correct, and that's that Hillary has transitioned from when we were speaking about these things as, being relatively popular. I mean, she was commanding, loyal support within the Democratic Party on the tune of 65% approval ratings and so forth back then. And now that's gone. The majority of the country now actually believes that she's a pathological liar, that she's corrupt as sin. And that transition happened about in March of this year, where it's just through a process of osmosis and building up of the nonstop revelations about how corrupt this psychopath is. And I choose that word advisedly. I think she clinically fits the definition of an outright psychopath. So
yep, I agree. She is. And there's actually books out now to prove it. There's a new book that just came out literally a couple weeks ago called Crisis of Character. A White House Secret Service officer discloses his firsthand experiences with Hillary Bill and how they operate, by Gary J. Byrne. It was just released. So that's a book our listeners can check out about that. The other book that's been out for a couple years now, the author has actually put out a couple different books from accounts of Secret Service agents and presidents, was The First Family Detail. Secret Service agents reveal the hidden lives of the presidents, and in the President's Secret Service, Behind the Scenes with Agents in the Line of Fire and the Presidents They Protect. Both of those books are by Ronald Kessler. You can find them on Amazon. They're also on Audible on audiobook, all three of them, or at least two of the three are. But I think one of the takeaways there's lots of stories in there about how bad a person Hillary Clinton is. The other thing is now you have Joe Biden coming out and talking about how, he'll go through hell to get Hillary Clinton elected. I mean, Joe Biden is if you read those Secret Service books, you'll hear some funny stories about Joe. He's actually like, the crazy uncle that most of the time people don't want out in public. It's a crazy family member that you don't want to be associated with because he always does something either really dumb or really mean to you or embarrasses you really bad. Supposedly with the Secret Service agents, one of the main stories is that Joe Biden is like a drunk prankster, and like when his Secret Service agents, come to pick him up, he answers the door butt naked to mess with them. Yeah.
I didn't hear that one.
Yeah. He's crazy Uncle Joe. Yeah. There's other funny stories in there. I listened to Carrie Lutz interview Ronald Kessler, the author of First Family Detail, a while ago, and it's actually considered a huge punishment if you're a Secret Service agent and you're assigned to Hillary Clinton's detail. She treats the Secret Service agents like less than human. Her and her main assistants do. Yep. They don't treat their people very well. So let's move on to the other scumbag nominees I have. There was a story, Eric, out about the sit-in for the 26 Democrats in Congress for new, stricter gun laws, right? Did you see that one?
Yes.
Well, what our listeners may or may not be aware of, and this is why they're scumbag nominees for the week, is that these guys are such big hypocrites, is that 25 out of the 26, there was a USA Today story on it a couple years before the sit-in, they own guns personally. Mm-hmm. So they go to the shooting range, they like to shoot. So when asked about this contradiction and obvious hypocrisy, what one or two of the congressmen said is, well, those rules don't apply to us.
Yeah, well, they're bolt-action rifles that they're shooting tin cans at, or they're hunters.
No, I think It was handguns. So
yeah, I know.
So I mean, these guys, some of them don't even want citizens who are law-abiding, millions of Americans, to own any guns at all. So this is not just about we're going to ban assault rifles. There's a lot of Democratic Congress people, and also, people like Kim Kardashian and other celebrities who don't want people who are law-abiding to even own a handgun for protection or to go to the shooting range or anything. It's just ridiculous, though, the amount of hypocrisy that these people have. They think they're above the law. So there's a whole set of laws, and it's like this, with their investments and dodging taxes. There's a lot of people in Congress who, want us to pay higher taxes while they look for every single loophole to dodge taxes legally or illegally.
Anyway,
okay, now
we should probably say, just as a footnote, because I'm sure we probably have members in our audience that are in favor of gun control. The reality, regardless of what you may think about the ideological position, the data does not support the reality that gun control works. It's the exact opposite. Australia pulled in a huge amount of guns, and the crime is up as a result. When you look at FBI statistics in the United States for crime, violent crime has been declining, and we have the exact opposite message being thumped on by the mainstream media because it's being driven by a political objective, and that's to strip Americans of having their Second Amendment rights.
Yeah, well, they're not just trying to strip us of our Second Amendment rights. They're debating trying to take away our free speech, too. There's a lot of people on college campuses, a lot of brainwashed college students out there who want free speech totally regulated.
Well, to quote George W. Bush, the Constitution is just a goddamn piece of paper. He really said that.
He's been retired, but I guess if he continues to do and say stupid things like that, we could bring him out of retirement to nominate him for a Scumbag of the Year, potentially, maybe even a Lifetime Achievement Award.
Yeah. Well, Hillary's got that wrapped up, so sorry.
For a Lifetime Achievement Award?
Oh yeah.
Yeah, John Maynard Keynes is a Lifetime Achievement Award. I was gonna do a video in December or January. In addition to our 2016 winner for Scumbag of the Year award for 2016, I was also going to do a Lifetime Achievement Award for Scumbag for Keynes, and start revealing more of the ridiculous stuff that's in his life and his theories and things like that. He was just a total fraud in a lot of aspects, and he destroyed the lives of his best friends too, just for fun. His other academic professors, anyone who disagreed with him even a little bit, he tried to get them, their professorships removed. It's a real scumbag right there. Anyway, though, we're on to the next one. This one, it's going to sound similar, guys, because someone else, another person, has been doing almost the same thing with the Clinton Foundation, but on an order of magnitude larger. So Representative Corrine Brown, a Democrat of Florida, and her chief of staff, Elias, and then in quotes, Ronnie Simmons, are being charged with 24 counts of fraud in connection with a fake charity, according to a federal grand jury indictment that was released last week. The charges include mail-in wire fraud, conspiracy and tax fraud, according to the Department of Justice. Prosecutors alleged that Brown and her associates were pocketing funds from One Door for Education organization that billed itself as a charity for poor students, even though it was not properly registered as a nonprofit. So obviously it was only $800,000, and I think she's facing up to 300 years in prison with all the counts if she actually served them. Obviously not going to serve all 300 years, but Eric, this sounds familiar to me. So obviously it's not on the scale of the Clinton Foundation, but a lot of the things that this Corrine Brown was doing are basically the same thing the Clintons were doing, but on a smaller scale. And yet, she is a scumbag, her and her friends who are doing this fake charity and pocketing the money. It's just amazing that the Clintons get away with this stuff. Obviously it's good, though, that this lady, Corrine Brown, is going to go to jail. So
you actually have not painted with a brush to show the degree to which she's as ugly and as scummy as she truly is, because she's an African-American politician in Florida and championing poor neighborhoods and disaffected kids and so forth. So these charities that she tapped were charities designed to help elevate the poor. This person has made a career in her congressional 20 plus some odd years, I think. I don't remember how long she's been in Congress, but she's had a long career championing the upliftment of the poor, and one of the things that she had been doing was setting up these charities. And then what does she do with them? She uses them as a slush fund.
Yep, personal slush fund. She's been in the House of Representatives, Eric, since 1993, and she used more than $200,000 in charity funds to put on a golf tournament, throw extravagant Washington parties, obviously to get more money from lobbyists, and for luxury box seats at a Beyonce concert and an NFL game. Money for the charity was also spent on ultra-luxury vacations in the Bahamas, Los Angeles, and Miami Beach. Just total misuse of funds. And, if you listen to my Charles Ortel interview talking about charities and talking about some of the bad things the Clinton Foundation has done, this lady, Corrine Brown, is obviously a lot lower scale. The Clinton Foundation is many orders of magnitude larger, but she's doing the same things, obviously on a smaller scale, though. And yet, finally, she got, the book thrown at her, and that's good. She's a corrupt scumbag, and she belongs in jail for the rest of her life. But, the Clintons have done even worse, and look at them. But I guess they're probably too big to jail now, Eric, because the rumors are going around that there's too many people, higher up people involved with the Clinton Foundation, and that's one of the reasons why she may have gotten off the email scandal, is because the Clinton Foundation, if the results were to get out, all the details about the Clinton Foundation, all the donors and things like that, then the shit would really hit the fan.
That's the primary reason. I mean, it's a war of control files. And Hillary would take everyone down with her if she were to be sliding down the razor blade and looking at Sing Sing or whatever.
Do you think she did that? Do you think Hillary has been, spending her whole career doing this, digging up dirt on people and, paying off people, so she has, control of them for later, or so they won't, take her down with them or something?
Well, I mean, it's kind of like just part of the process of networking in their world. It's not necessarily that in the back of her mind on every single day she's thinking, okay, I want to have dirt to be able to pull on people. But when you're swimming in a putrid cesspool and there's dirt all over the place, it just kind of comes with the territory, and they're opportunistic in the sense that they recognize where power comes from. Having the ability to have dirt on people gives power, and that is the world in which they exist. So that's the game they're playing, and she is very good at that game.
Yeah, and it's a dangerous game too. Game of Thrones or House of Cards, it's right up there. Obviously we have better technology now. There's more social media. There's more ways to gather proof and private investigators and things like that. So, I mean, she's a big time shark. She's, a big, powerful, great white shark. You got to be careful swimming around her. You don't want to be swimming around her at all.
No lampreys hanging on the underbelly of Hillary Clinton are safe. That's for sure.
Yep. And so I have one more scumbag for this week nominee. Obviously I could spend a lot more time. There's the police officers who deleted the Facebook video for the shooting for the Diamond Reynolds' phone, allegations of that. And there's so many more that we could talk about on the show, but I don't want to spend all of our time. There's just, it's just so many. It's one giant clusterfuck of all the scumbag nominees, all the different, crony capitalists and politicians and government agencies and things like that all over the globe. The last one is Bernie Sanders. He spent so much time saying how bad he was Hillary, and there was a hashtag on Twitter, never Hillary, right?
Right.
Well, what happened to Bernie Sanders this week? He's been endorsing Hillary Clinton. He's going to do, what it takes to make sure Hillary gets elected. So, I don't like people like that flip-flop that bad. I don't like hypocrites.
It's been an act. Early on, it was over, 6 months ago in the debates that he was saying, oh, enough of this email thing, I mean, he's been a team player and kind of a shill for or a better said, a steam valve releasing pressure from the progressive wing of the Democratic Party. And I think that was something that was consciously allowed to happen, in the sense that the Democratic Party enjoyed the fact that in the earlier phase of this primary election campaign, Bernie was actually keeping the masses within the Democratic ranks, satiated from boiling over or leaving the party or whatever. A voice, the counter to the Hillary of Wall Street and warmongering fame. And it was clear all along that Bernie, A, didn't think he's ever going to win. And then he started actually gaining momentum in such that, a month and a half ago, 2 months ago, it actually seemed like he was believing that he could actually win. Then there was vote fraud in Arizona in particular that was really aggressive and basically stole the election from Bernie. And then AP announced 12 hours or 24 hours, I forget, before the California primary that Hillary had it wrapped up when in fact polls were nowhere near at the level that justified that kind of declaration, and it was a slime action taken to try to shape public opinion to keep Bernie Sanders supporters away from the polls. I mean, this whole Bernie phenomenon has been fascinating to watch, but when it comes to whether or not the guy is a scumbag, the guy believed all along that A, he was never going to win, and that B, he was just playing along and being a team player. There's been never any indication at all, other than that hashtag that you mentioned about never Hillary. The reality is that he's, for every instance you can point to for that kind of thing, there's equal, if not 10 times as many instances that you can point to show that the guy's been a party apparatchik within the Democratic Party all along. We've been talking about this and basically making fun of people, the progressives who've bought into this whole free stuff mantra and slightly more progressive foreign policy orientation and so forth that Bernie represented. But it's all been just kind of like this for show public relations dance when it comes to. I think he's a liar. I think he we know he's a hypocrite when it comes to his own personal wealth and the way he comports himself vis-a-vis this progressive message that contradicts his own lifestyle. I mean, he represents a perfect example of why we have a scumbag nominee section in this podcast that we do.
Yep, and he seems like a useful idiot to Hillary Clinton.
Yep.
Just like a lot of the Hollywood actors are useful idiots to the Democratic politicians.
Yep.
Yeah, I've heard George Clooney, I forget where I read it, but a couple years ago I was reading this great piece somewhere about how George Clooney is one of the worst useful idiots for Obama and Hillary Clinton and stuff like that, and how all they have to do is give him a phone call and he can, get all of his Hollywood friends out and write checks blindly.
Yep, I've seen quite a bit of airheadedness in Hollywood up close and personal. Let's just say there are not a lot of political scholars in that community.
Yeah, well, I think they spend a lot of time partying and doing drugs and sex and stuff like that. So, I mean, they don't spend a lot of time. I think some of them do read books, but they're probably reading the wrong stuff. But, yeah, a lot of them spend their time, working out, and they're very superficial and things like that. But, Eric, we've come to the end of the show. We're actually a little over an hour. We wanted to talk about some options trading ideas that Eric thinks are profitable in gold and silver. Instead of spending the time on this show to talk about it, how about you just either email us at wallstreetformainstreet@gmail.com, or you can email Eric separately. And if Eric has been doing very, very well doing gold and silver mining stocks options trades, very considerable amounts of profit. Don't want to go into the exact numbers, but if you guys are interested in learning, yeah, I don't want to give anyone any specific numbers, Eric, because people nowadays
I don't mind sharing my performance. And I have been doing far more than just options and stuff. But, no, this year's been phenomenal for me. I've never done anything like this before in my entire life. I mean, this gold bull market is something to behold. It's gonna produce gains that are just going to blow people's minds. My trading account, I went down a little bit today, but yesterday I was over 15 times return on investment for 2016. And family office account, which is a little bit more difficult to manage because it's bigger. That's up about 6 times this year. So it's been a crazy ride. The mining shares are probably in a second inning of a 9-inning game, and there's a lot more to be had in terms of great profits. So we'll talk about that in shows in the future. And there's a lot of interest in that kind of stuff, and I'll definitely be writing more about it and sharing more ideas with people as well when it comes to the articles I'll publish on the news doctors. And at some point, I'll probably launch a newsletter. I've been working on it for a while, but because of Lyme disease and commitments to, that come with the day-to-day production of those kind of things, I've been kind of shy about taking that on just because I don't want to start something that would require me to sacrifice my health in terms of juggling all of the various balls that I juggle on a day-to-day basis. But at some point, I'll get that up and running. So it'll be fun, and we'll definitely bring that to the table when it comes to our podcasts and give people some feedback.
Yeah, I think for people who are more conservative for gold and silver stocks, I think the royalty and streaming companies, instead of, if you could obviously just buy a gold or silver mining ETF like the Sprott Gold Miners ETF or GLD, not GLD, GDX, not GLD, GDX.
Mm-hmm.
GDX is a large gold miner ETF, or GDXJ, which is a junior gold miners ETF. There's also the silver, junior silver miners ETF, SILJ. There's about 4 or 5 of the gold and silver miner ETFs, but the royalty and streaming companies, so like Silver Wheaton, Franco-Nevada, Royal Gold, Osisko, which is going on an American exchange now under symbol OR, Oscar Robertson, so OR. They're listed on American exchange now. Osisko, they're not over the counter, Osisko Royalty. So they can buy that. I think they got about a 1.1% dividend yield with that good growth portfolio too. We just actually upgraded that on our precious metal model portfolio from a mid-tier to a top-tier Osisko. Because of their cash flow and diversification, and obviously my favorite, Sandstorm Gold, which has diversification all over the globe. So if you own at least a couple of those gold and silver royalty and streaming companies, you're going to have exposure to gold and silver all over the world. Cash flow with that too. The other thing I wanted to talk about before we go, Eric, and this is because I think we are in the midst of an accelerating European banking crisis. What are ways you think our European listeners can protect themselves? If I know we have a lot of European listeners, if they do live in Europe, if they do have money in the bank, what are ways you think, simple ways to start protecting themselves, diversifying, etc.?
Well, it depends on their net worth and whether or not they have debt and their financial profile and so forth. But precious metals is a straightforward way of getting exposure outside the banking system. Real estate can be effective. Other forms of commodity exposure can be effective. Operating a cash-flowing business that is predicated on economic activity that is not as vulnerable to downturns can be effective as a shelter. There's lots of different ways that whether someone of modest means can get some of their savings exposed to something outside the sector, and most likely when we're talking about people who only maybe have a $10,000, 10,000 euro kind of free cash flow to deploy, maybe in that scenario, the majority of that money is best to stash away in precious metals. If somebody has a net worth that's considerably larger than that, then all of a sudden it becomes a little bit more complicated in terms of how to get good diversification and so forth. But what works in the United States works there. It's really not all that different.
I would say so, Eric, except that there's even higher immediate VAT tax on buying physical gold and silver in a lot of European countries. So our listeners have told us, Britain ones, I can't remember if it's gold or silver that has for our English listeners, I can't remember if it's gold or silver that has the higher VAT tax. I know in France there's restrictions and also higher VAT taxes there too. One way you may be able to get around that is to sign up for a Bitgold account and buy physical metal there. I'm not sure if they would charge you the VAT tax if you would buy physical gold from Bitgold and then store it in either Toronto, Canada, or Hong Kong, or some of the other vault locations. And you could either have it there just in case maybe there is a collapse in Europe or a bank shutdown or something like that. And then you would have a Bitgold debit card if you had to leave the country temporarily and go to another country, and you could spend your physical precious metals. It would convert then into whatever currency was local if you did have to travel.
And for average people, the best thing to do, frankly, is to pay down debts, to put the store of food in place. So, if you have expenditures in your house or your vehicle, or you've got teeth issues that you know are going to come up in a year. I mean, making expenditures that derive necessary maintenance of your life, and doing it is a form of storing value as well. So, it isn't necessarily that you have to be an investor to be able to protect oneself. You just have to think kind of like a prepper, in the sense that if you look at what you do in your life and figure out how you can gain a greater degree of autonomy from the economic vagaries of our system, then that is actually increasing your overall security and economic well-being. So it isn't just about stocks, bonds, etc. It's lifestyle. Cut back.
Great point, Eric.
Don't spend as much. Save as much. Try to sock away more money such that you can pay down debt, for example.
You can't really save in fiat, though, Eric, because of, negative interest rates and financial repression, and
I
the currency.
Long-term savings. I mean, in a short-term cash flow basis, as people earn money, because of the insecurity and instability of our global economic system, being less in debt actually increases one's flexibility vis-a-vis possible loss of jobs or what have you. So, debt is conceivably a good thing for some folk, but at the same time, other people will find that it will bite them if we go into further economic decline and people lose their jobs and so forth. So,
that's a great.
A lot of people in our audience are, reasonably well off, and they're interested in stocks and investments and so forth. But I'm sure that many of our listeners don't have the wherewithal to be able to protect themselves that way, and they're wondering what the heck they can do. In a nutshell, think like a prepper and explore what that means in your own life, and you'll find
Eric,
answers.
I think that's a great point that you mentioned about health above wealth. It's common sense. I mean, you could have tens of millions of dollars, but if you're a sick person and you have diabetes or you're dying of cancer and you only have 6 months or a year to live, all the money in the world doesn't matter a whole bunch. So health is more important than wealth, at least for a good amount of most people, I would say. Okay, well, we've reached the end of the show. Unfortunately, we're over an hour. So for those of you guys who don't like long shows, we're sorry about this.
We're long-winded. What can we say?
Well, there was a lot of there was a lot of topics to cover. I mean, we had to cover a lot of different current events topics. There were so many more, but I try to go through Zero Hedge and other news stories to pick out the best ones. But yeah, we could have covered a lot more. We could have talked about the European banking crisis, even more specific banks or things like that. Eric, you sent me a story about Unicredit, how the Chinese are buying into that. I mean, the Chinese bank, a state-owned Chinese bank, they're not going to go in there and give them the money unless they're getting something valuable in return for, buying into an Italian bank. So thanks for our listeners. Maybe we'll talk about that on the next show. And everyone have a great July.